Hey everyone, and welcome! If you've ever felt like the crypto market is moving at a million miles an hour and you're just trying to keep up, well, you're definitely in the right place. Today, we're going to dive deep into automated crypto trading and break down how you can use some pretty powerful tools to trade smarter, not harder. All right, let's get into it.
So let's just start with the big question right off the bat. Is there a shortcut to all this? I mean, we all know that staring at charts all day, trying to time the market perfectly, it's not just hard, it's absolutely exhausting. But what if technology could give us a totally different way to approach it?
This really gets to the heart of the crypto trading dilemma. It's a super high-stakes game that basically demands you're watching it all the time and have nerves of steel. But let's be real. For most of us, that's just not going to happen.
And here's the real kicker. The two biggest emotions in any market are fear and greed. They're powerful, and they can make us do crazy things, like selling when prices crash and buying when they're at an all-time high, which is the exact opposite of what you want to do. Honestly, this emotional bias is probably the single biggest risk to a regular person's portfolio. So, how do we take emotion out of the equation?
Well, that brings us to our first potential solution, copy trading. This is where you can basically piggyback on the experience and the strategy of a much more seasoned trader without you having to make all the tough calls yourself.
Just think of it like this. You're hiring a financial chauffeur for your crypto. You do the research, you pick a master trader you trust based on their track record, and then a system automatically mirrors everything they do in your own account. You're still in control of your money, but they're the ones navigating the tricky roads of the market.
And the way this works is just seamless. It's incredible. Let's say your master trader spots a great opportunity and decides to put 5% of their funds into a Bitcoin trade. Instantly. Before you could even blink, the platform's software sees that and boom, it executes the exact same trade in your account, but scaled to your budget. It all happens in the background, all about speed and precision.
Okay, so let's move on to our second solution, which is a totally different beast. If copy trading is all about harnessing human expertise, trading bots are about taking the human out of the picture completely and relying on pure, cold, hard logic.
So what is a trading bot, really? It's basically an autopilot for your trading account. It's a piece of software that you give a very specific set of rules to, like buy this coin when this indicator crosses that one, and it just follows those rules 24/7. It never gets tired, it never gets scared, and it never gets greedy. Now this slide is really interesting because it lays out the contrast so clearly. With copy trading, you're betting on a person, on their skill, their gut feelings, their intuition. With trading bots, you're betting on a mathematical strategy. One has that human touch, the other is all about machine logic. They're both really powerful, but they are fundamentally different ways to go about it.
And believe me, the world of bots is huge and diverse. You've got grid bots, which are awesome for markets that are just kind of bouncing up and down in a range. Then you've got arbitrage bots. Think of them like digital detectives, always hunting for tiny price differences between exchanges to skim a quick profit. And then there are DCA, or dollar cost averaging bots, which just steadily buy a little bit over time to smooth out your average entry price. There's a tool for almost any market condition you can think of.
Okay, this is super important. Whether you go with a human trader or a bot, you absolutely positively cannot skip your homework. You have to vet any strategy before you put a single dollar on the line. So think of this as your pre-flight checklist.
These 5 things are your guiding stars. First, check their assets under management, or AUM. That's the total amount of money other people trust them with. A big number is usually a good sign. Second, know the fees, which is usually a slice of the profits. Third, and this is a big one, make sure their trading style fits your personality. Are they a high-risk gunslinger or more of a slow and steady type? And finally, look for consistency. Anybody can get lucky for a week. You want to see a solid track record stretching back for months.
And this number right here, this is a perfect example of why you have to check the maximum drawdown. This tells you the biggest drop from a high point to a low point a strategy's ever had. A drawdown of 52% means that at some point this strategy lost over half of its value. That is a seriously high-risk profile, and you need to know that before you even think about getting in.
Now, once you do go live, think of these 3 tools as your non-negotiable safety nets. A stop loss is your emergency eject button. It gets you out of a bad trade automatically to stop a huge loss. A take profit does the opposite. It locks in your gains automatically when you hit a price target.
And diversification, well, it's the oldest rule in the book for a reason. Never, ever put all of your eggs in one basket. Spread your money out.
Of course, you need a place to do all this, right? Finding the right platform is key. This is just a quick snapshot to give you some ideas. For example, a platform like Binance is amazing for its demo mode, which lets you practice without risking any real money. If you're looking for more advanced pro-level tools, Bybit might be more your speed. For all you altcoin hunters out there, KuCoin is like a giant playground. And if you're a complete beginner, BingX is fantastic because it lets you learn with virtual money first.
So let's bring this all home and talk about what this really means for you, the modern investor. The game is definitely changing, and automation is right at the center of it all.
Now, let's be crystal clear about something. None of this is a magic money printing machine. It just isn't. What these tools give you is a strategic edge. They let you operate without emotion, they let you execute complicated strategies perfectly, and they let you be in the market 24/7. It's really about using technology to level the playing field in a very competitive financial world. And that leaves us with one last big question to chew on. As all this technology, especially AI, gets smarter and smarter, who are you ultimately going to trust more with your money? A seasoned human trader with years of gut instinct, or a hyper-rational data-crunching algorithm? The answer to that question might just define what investing looks like for the next generation.